Okay, hi everyone. What I'm going to talk about today is overlapping imbalances when they occur in the market and how you can use them to your advantage. My name is Michael Valtos. I'm the founder and trader of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so what I'm going to talk about today is stacked imbalances and how you can profit from them. We all know what stacked imbalances are. And when you're talking about imbalances in the market, you're talking about buying or selling imbalances. This is an order flows trader chart. Okay. Yes, I sell an order flows trader chart. I'm making this video. Someone had commented to me, well, you can only use it with the order flows trader chart. Well, yeah, of course. I mean, that's what the software is there to do. It's there to help you find these things. It's kind of a strange comment, but nonetheless, here we are. These are buying imbalances. These blue numbers. These red numbers are selling imbalances. Most order flow trading software has imbalance feature in there. So, my software also has a couple extra features with it. But, for the main point of this, what I want to talk about is when you have overlapping imbalances. Now, here, markets trading, boom, you get a stacked buying imbalance. 1, 2, 3, a stacked buying imbalance, and you're thinking, hey, this is my chance, I should go long, right? You're going to be looking to get long, just after here, because you're going to look at this to be a support level. Okay, then what happens? It doesn't work. It fails. There's no support. These buyers that were here earlier, where are they? They're gone. They bought what they needed to do, and they're not buying anymore. Where's the buyers? They're gone, and the market sells off. Then you get a selling imbalance. Now, when I say overlapping, what I mean is, okay, the order flows trader chart. Just real quick, why I talk about, my software having a little bit extra features is, where is it here? Say you're looking, where is it here? The imbalance box size is 5, 1, 2, 3, 4, 5. And what it means is drawing it out 5 levels. You could also say, how many when you want it to print. You want it to print, if there's 2 stacked or 3 stacked, minimum of 2 or minimum of 3, minimum of 4, it depends on what you want. You can, so you can make some adjustments there. And, the percentage volume, or sorry, the imbalance trigger, if you wanted 400%, you'd put in 400. You wanted 300%, you wanted 1,000%, you could adjust it. And, minimum volume. Say, if you only want to see stacked imbalances, that are above 200 lots, you can do that. You could put in 200, so you'd see, you'd only see this one. You wouldn't see this wouldn't qualify, this wouldn't qualify. But anyway, so getting back to the stacked imbalances, and you have this stacked buying imbalance, and it fails, okay? But within this zone, within this 5 price zone, you have a selling imbalance. Basically, you have an opposing imbalance. Initially it was bullish, now you got a bearish one. What you do is you go with the second one in the direction of the second one. It's usually a quite powerful signal, because what you saw earlier, everything's changed in the market. It went from a strong buying market to a strong selling market. And what happens? Boom, you're getting short here now, 91 and a half. And what does the market do? It just falls over, You're talking 91, we're doing, you're trading 86, you're going to trade all the way down to 84. But, you could have got at least 5 points out of that move. It doesn't happen that often, but when it does, watch out. This one's not opposing, okay? This is, a buying imbalance and a stacked buying imbalance followed by another stacked buying imbalance. But it's still within this, this zone it goes out 5 levels that you can set it. Say you want it to go 10 levels. I don't expect this stacked buying imbalance to hold all day. For me, it's a short-term thing. I'm looking for it to continue in that direction. And if the market pulls back within these 5 bars, I'm looking for it to act as support. If it doesn't hold, if the market just falls over, then yeah, obviously it failed. But again, I'm not looking for this stagnant buying imbalance to be a level if we come back to it 3 hours later for it to hold. No, I'm just looking at it in the short term, because I know that when you're trading, and now I'm speaking from experience. I used to work at the biggest bank in the world, well, biggest bank in America. No, probably not the biggest bank. Bank of America, I think, is the biggest. It's one of the biggest. It's JP Morgan. And I know what it's like when you're trying to work an order through the market. You're trying to buy a lot. You're going to be aggressive at certain levels. You need to get a lot on board. And if the market's going to come back down to your level, you'll often buy more. So I could sort of read what's happening here. As the guy starts working his order in here, trying to buy, he gets aggressive, market shoots higher, shit, I need to get more done. He gets aggressive again to finish up his order. He's done. All he cares about is his average price on this fill. His average price is probably somewhere around this 85 quarter area. And then the market goes higher. It did pull back, and then what these levels are holding, this level held, this level kind of held. But really what I'm more interested in is when you have a buying imbalance followed by a selling imbalance. This is the 27th, so it's the Monday after Brexit, so you're getting a lot of strange things in the market. And, you don't usually get 2 in a day. You usually get 1, if that. And it's not something that happens every day. But, when you see them happening within the 5 prices areas, within the zone, pay attention to it. This one's a little bit out of it. You got the selling imbalance. Again, this one didn't work. If you're getting short, you would have been stopped out here. I would have loved to see this buying imbalance happen in here. This was a nice one. It went up. But again, to me, I wouldn't qualify that one as a trade that I would have taken with the overlapping imbalances. Okay, now here, okay, you got your selling imbalance. All right, you're selling off. Boom, 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 boom. Big sellers come in. And it's holding as resistance. You can see it here. Then you hit this area down here, right? And then what happens? It's changed. It went from a supply-driven market, a lot of supply in the market, to a demand-driven market. And you see sellers have now become the buyer. I'll say become the buyers, but what you saw earlier was a lot of selling. Now you're seeing a lot of buying in the opposite direction. And what happens here? You're talking from this 88 level, trades up to the 90s. Yeah, it came back here, and then sort of went sideways, but really the move was here, from here to here. This is the price rejector, giving you a sell. So basically you had a few, this day's not even over yet. This is 1 in the afternoon here. I don't know how many there were this day. These weren't overlapping. It's too much time passed. Okay, and then we're closed for the day here. So that was the 27th. Let's see if there's anything on the 28th. This is the Asian hours. I'm not usually really interested in doing much trading during Asian hours and the S&Ps. I'd rather trade Nikkei. What are we doing? Anything, nothing. This is the 28th. So far, nothing. There's a selling imbalance that failed. Buying imbalance. Yeah, that worked. And then you got another one later, but it's too far apart. Okay, this one, I don't know what happened. There was something glitch in my data there, or something came out. But, okay, I don't know what happened here. As far as my data goes, there's a gap there. So I'm not even sure if this one should be there. But nevertheless, it did start to go, it did go down, a couple points, but when I see something like this, I think there was a sort of a hiccup in the data coming out from the exchange. I see this time we got all this 1433. I don't know if somebody said something or came out, but to me that just looks a bit dodgy. Sometimes you get bad data. That's the problem with trading on a retail level. If you're trading on an institutional level, you got Bloomberg, and you got basically one of the best quote systems in the world. That's just one by itself. That's one by itself. That's one by itself. What you want to see is when they're overlapping that zone. This one just by itself. Okay, here. You rally up, boom. Sellers come in. You're thinking, hey, this is our swing high. You got a divergence there. and you got the selling imbalance, and you're thinking, shit, I gotta get short, and you get short in here, but then you get a buying imbalance, you know, in the 1, 2, 3, in the third bar from the selling imbalance. You know, this is what I'm talking about. You gotta get in, you know, when you see these things. You know, again, this is at 3:30 in the afternoon. It's a little bit late, but sometimes you're gonna get these big moves going into the cash close. It's the 29th. This day, so it's Tuesday. So, you know, you could be getting in here somewhere, you know, around the 66 and a half level. And look at that. It's just a nice move all the way up into the close. You know, it's a nice 8-point move straight up. Basically no pullback. You didn't take any heat in this trade. Yeah, maybe you took, you know, 2 ticks of heat. You know, I mean, you say you're getting in here. Yeah, you take 1, 2, 3 ticks of heat, but it looks like it turned around pretty quick. So, you know, that's a beautiful move. That's what you want to see in the market. So let's go. This is the 30th. And like I said, you know, sometimes these things, you know, you get days where you get a couple in a row and days where you get none. This one is a little bit outside of the range. You know, this is in the 6th bar here, so that's the 7th bar. That's just by itself. This one, okay, this one, you got the buying imbalance and you got the stack selling imbalance. You know, this one didn't work. It just, you know, it came back up in here. Honestly, I'd be looking to take a loss for trading here. I wouldn't be looking to hold it in here. So, I mean, that was the first one that failed. You know, and it's the 30th. You saw how many that were winners. Okay, here again, this one. Yeah, I don't know. I remember what happened at 10:30 at this time. There was something. I can't remember now. So the last week was it seems like such a long time ago. But, you know, this one, you know, again, I prefer to have opposing ones. You know, I'm not a big fan of getting, you know, buying a balance, because sometimes, you know, what you're going to have is you're going to have a stop that runs through, especially if you're using a shorter term chart. You know, this is a 4-range chart. If I was using a 10-range chart, you know, I'd probably, you know, all this volume that's here would fill in, and so you wouldn't have a lot of these imbalances. Some of these would be gone. I don't think you'd have this stacked imbalance in here if I was using a slightly longer chart. But, you know, we came up here and I've got a couple of negative things here in the order flow, you know, telling me to bail out. That one's by itself. Okay, so that was it for that day. Now this is Friday, the 1st of July. Again, I'm looking for imbalances that are occurring within, you know, within the zone. This one is just, you know, too far out of it, and that's it. So there was nothing on Friday. Okay, so, you know, thanks for watching this video. If you want to learn a little bit more about order flow trading, you know, come to visit my website, www.orderflows.com. And, you know, you're sure to pick something up. If, you know, you're interested in my software, you know, send me an email. There's a contact form on my website that you could just fill out, and it'll get to me, you know, and, you know, order flow is great. It's a great way to analyze the market. Now, you know, I'm sure somebody will probably watch this video and come out with an indicator and try and sell it as the imbalance algo indicator. But here you can see it for free. You know, if you have any type of order flow footprint chart, you can use it. You can, you know, use what I taught you there. You don't need any special programming or anything like that. As long as it can read market imbalances, then, you know, you should be able to take advantage of overlapping imbalances when they occur in the market. You know, again, I don't use imbalances to act as a support or resistance level other than, you know, immediate term. Again, I don't look for the market to move and start trading over the next hour and 2 hours and then come back to that level and react to it. You know, again, I'm looking at it in the short term. So, again, you know, if you want to learn more about order flow, visit my website, www.orderflows.com. So thanks, and see you on the inside. Bye-bye.